welcome back, everyone. We're hard at it. No Tyler this week, just Lisa, Kyle, and myself. So back to the gang of three, which again, Tyler's good day comes back, but
Yeah.
it's not so bad that he's not here as well.
Oh, yeah. I hope he doesn't see that.
I'm gonna have to send him this clip how it starts. Anyway, episode 85. We'll start with the two truths and a lie. Well, today's a big day. It's a Fed day, so it seems like we record these on Wednesdays. I guess that makes sense that we record these on the day of the Fed meetings.
But before the actual
announcement. So we're recording the morning of the announcement. So we'll get in a little bit of a prediction segment here as well next. All right, let's do two truths and a lie. Since it is a Fed day, let's talk about the Fed. I made this one relatively easy, so hopefully Lisa can get this.
You start with me.
Yeah, so we're going to talk about the Fed. So A, the Federal Reserve falls under the federal umbrella within the U.S. Treasury Department. B, the Federal Reserve was created in 1913 after a secret meeting. Or C, the Federal Reserve has its own police force.
So I believe B is true.
Okay.
Yeah, I think that's
sure?
Yes.
After a secret meeting? Sounds very Illuminati.
And then Kyle, why don't you elaborate on point B, the secret meeting in Jekyll Island?
Yeah, there's a book that I've got on my shelf that's got dust on it. I read it, I think, 15, 20 years ago. I should pick it up again. It was good. It was basically articulating how that secret meeting came to be. It's called, I think, The Monster from Jekyll Island, if I recall correct. Well worth the read. I'll have to go dust it off. But it was very exciting. And it articulates how it came to be.
It was actually it was a clandestine meeting, so it was U.S. senators, a bunch of them, and bankers. So it's kind of an odd combination. And all of a sudden, they created this Federal Reserve system just out of the thin air. And I think they met like in 1910 and then finally got this through in 1913. It's just kind of the history is kind of a little. Have to give it a little bit of a side eye, but that was interesting. I thought we'd cover the Fed a little bit since today is the big Fed day.
Keith, before we start with the Fed projections, you got a very interesting text message yesterday.
Do tell.
Should we call out Mr. Jose from Arizona?
Oh, you should.
Yeah, because Jose is the number one or in the 0.1% top listeners of the Pickers Market.
Really?
Yeah, thanks. A special shout out to Superfan. We love it.
Yeah, we have a super fan out of Arizona, one of our advisors. So
good call, Lisa. I love that.
So we have to call that out. I think he's with us since the beginning.
Don't worry, everyone. There's plenty of room on the bandwagon to join Jose.
There's plenty of room on the top, but Jose is a top fan. We love it.
Oh, that's awesome. Thanks for calling that out, Lisa. All right, now on the Fed. Today's decision day. The probability of a Fed cut is 25 basis points, which is at 90% probability odds. So it's fairly high. Do you guys think that's going to happen? And then what's your guys' takeaway, or what should we be looking for, or what the listeners, what are the things that we're watching? Yeah, Kyle, you want to start?
Yeah, I think it's a maybe not a slam dunk, but pretty close. I mean, odds are 90% now on Polymarket and CME. I do find it a bit ironic and amusing that the expectations around the cut have jostled so much in the last 4 weeks.
That's the more interesting part.
I think. To me, you have to take it with a little grain of salt, I feel like, because after we talked about this, I think a couple weeks ago on the pod, where it was 90% odds of a cut, and then November happened with all the volatility around the momentum unwind and Mag 7.
It came down to 25%.
It came down to 25%. And then now it's all of a sudden back. And so I actually went to Polymarket, and I didn't realize they had like a chat, on there where you can type your comments. And so I just,
oh boy, Kyle's typing comments.
Kyle did a deep research.
Yeah, just angry typing on there. No. So I was curious because we talk about like the betting and the how markets have changed and volatility and
so how much is really projection and making economic bets, or how much is just
gambling? Just gambling, right? Right. So I stripped out I basically just grabbed all the entire comment chat and including my angry comments. No, and I just created a word cloud of it, like a word frequency, to see like.
Oh, really?
Yeah, I put it in the chat. Clearly, you don't read the team chat.
No, I read the big one. I didn't read that. I guess I didn't see that part.
Yeah, I'll send it. It was very, very interesting. So basically, and then I piped it into Grok or Chat GPT or whatever, and I was like, give me sentiment, give me, kind of like.
Did you?
Yeah. It was very, very fascinating because I was like, I kind of knew I had an inkling of who would be on Polymarket making these bets, because the notional on it is huge. Like it's like a couple hundred. I think it's like $100 or $200 million or something.
So it's not like $300 getting bet.
No, it's hundreds of millions of dollars that are moving on.
And that's just Polymarket. Then there's Kalshi, which is like another big one.
Yeah. So anyway, so I took the comments and I'm like, who's actually betting on these things? So then I piped it into the AI and I was like, create me a bag of words, text frequency with the blah blah blah, all that stuff. And it gave me some interesting stats, and it was like 80% of the comments over the last year and a half or whatever, are directly aligned with like traditional gamblers' fallacy in terms of like behavioral finance.
So they don't care what to gamble on. It's the Fed. Okay, then let's do that.
Right, but their comments are like, is very. There's like an interesting cohort of very tribal, like people yelling at each other, like, how could you be so stupid? Of course it's going to be a 50 bip, and then like the to the moon comments. So like clearly using it as a binary option to say, I don't care if it's, if this $20 goes to zero, I'm betting for the outsized outlier as like a, the 50 bips or the raise of 25 basis points versus the expected 25 basis point cut. So it's purposely taking the edge cases to try and gamble to multiply your return.
Wow.
So it's very, very interesting.
Kind of like meme stocks almost, huh? Kind of
right.
Same mentality.
Right. Yeah. Right. Yeah. It's memes, themes, and gamification, right? So people are they've got it in their pockets and just boop, click the button. So
now they figured out a way to do that with the Fed and with everything else.
Yeah. So that being said, I don't, CME is a little different than Polymarket, but I do think.
But even there, the expectations varied widely, which the volatility, even there, where we say, okay, there it's more serious.
Right.
It's still like the volatility was a little bit unusual.
Yes, right. So definitely expectations, gamification a little bit, but different investor scope. That doesn't mean that you're eliminating some of the behavioral biases that they're just way more pronounced in a Kalshi or a Polymarket or whatever. So,
but that was actually an interesting.
Yeah, it's very, very fascinating. Yeah. So I'll send it again so you can
reread it.
Yeah, maybe you forgot.
I got my 1,300 emails in my inbox.
Right.
I must do one of them.
So anyway, so I think they will cut, and I think I think the focus will be on the commentary, and that would be leaning towards a cut, teeing up additional, like wait and see, but more in the camp of, hey, we're gonna tee up cuts for next year.
Okay, Lisa. Hey.
I think I can agree. To the most part with that. I think they give us the cut now because they try to not disappoint the market all that much.
Yeah, that's 90% probably, I think.
Right. So I think that is pretty much set by now. I mean, the last time we spoke about it, that was in the midst of all that volatility that looked very much different. I think we get the cut now. I think what will be interesting, or their right move to do, is they will be very cautious in their outlook just to set the expectations going into 2026. And I think they're going to be a little bit more conservative just to bring expectations down, that they're a little bit more in a wait and see approach, because now they're favoring the labor market over inflation, which is still too high. Labor markets, I mean, we do not get the October report. November report we should have by now. Last Friday, but it was delayed again. We get it next week, so the Fed does not have that.
Well, they don't have it, or we don't have it.
Well, yeah, whatever.
Technically, they're not supposed to have it, but
but they sure have some insights on that. So, and if we can, expect a few, continued weakening with inflation too high, I think they're more like, okay, let's wait and see how this plays out for a little bit. So I think the commentary will be very important today, that they probably tone that down.
So you think they
much.
sandbag it? And so with the commentary to give themselves more dry powder, more optionality.
Yes.
Okay. Do you feel that the market is anticipating that, or do you think that the market is anticipating what Goldman and Merrill and RBC and all these others have projected for next year of this glide path to 3%?
Well, I think they will cut it next year, but I don't think it will, continuing going on like month after. Yes,
yeah.
right.
Okay.
That's what I don't think will happen. I think we will see cuts, but I think they're going back to being more cautious and wait and see, and maybe leave it a month and then see how it plays out and then move on. So it will be not like,
okay,
not now that we have the third one.
Yeah.
In continuous cut. So I think we do not move on like that.
So do you think the market's price that in already, or do you think that if that comes, that prediction comes out, that the market will actually turn red?
I think it might be more important the overall trajectory of interest rates by now, which is coming down. And I think the market will be fine with that. But I think it's somehow anticipated that it's not going as rapid as it did the last 3 months.
Yeah.
I think. So I think the market is anticipating at some point a wait and see approach. And I think it's going to appreciate it, to be honest. I think it's the overall trajectory that it's important. And that is still down. So I think the market should take it in stride.
And then I'd be curious on both of your views. So in the last couple of weeks, we've seen a dramatic rotation of strength back into small caps, all-time high, late yesterday, I think. Do you think that this trajectory, and a lot of that is due to the variable rate debt and the floating rate, and as the Fed continues to reduce, you're seeing some of these zombie companies that are unprofitable become profitable again, and see some earnings growth. Do you think that this trajectory today, and then as you continue, do we continue to see that flywheel gear up where small caps and the market continues to broaden out, or no?
That's a good question. So I think for small caps, they are very much more sensitive to that. So that can be a wrench in the wheel, what we saw so far, when it's going slower than, and even if it's anticipated, but if it's going slower, that's obviously
so if they come out and say we're cutting and we're
waiting, or at least bring expectations down,
so small cap could pause some of the momentum we've seen.
I think so, yeah, more than large cap for sure.
Okay.
I think,
I'd fall right into that line of thought. At least I think you're right. I think we get to the path is still down. I have to give Tyler the kudos that he was right on 3 cuts this year, not 2, assuming we get 1. I thought they should do 2 only. They're doing 3. I think I'm more in the camp that they should kind of tone back the language to kind of pause, but that could, I think it knee-jerk reaction, I think, would be negative by the market. I think that would put a pause on this broadening out small cap rally, maybe even international seems maybe a little outside the whole wheel, but I think international also plays into that broadening out theme. So no, I do. Again, now to your point, I think the consensus is all those big ones are saying they're probably more aggressive on the cut path, definitely down, more aggressive. So if they do the camp of kind of a little more hawkish than dovish on their commentary, I think the markets could probably sell off a little bit. I don't think it'll be much. I think it's because I think the path is still down, but it could certainly cause a pause into some of these names that have really done well outside of in the Mag 7. If you look at them, I think I saw a stat today that there's quite a few of them that aren't even keeping up with the market this year. So
I saw that this morning too. The only one beating out of the 7 is Google.
Yeah,
so it's so as much as time and energy as we spend on it and the market spends on it in TV and media, which we have to because it's such a big part of the overall markets here, 30-35% of the overall markets, which is a third just in a handful of names. So that's why we spend on it. But it's be wonderful if the market can continue its grind higher with a broadening out and not those names necessarily being the leaders. But I still think you want participation in them. But I think you're starting to see that, it's I think Meta's CapEx statement and people starting to question circularity with Oracle.
We saw that chart from Oracle this morning.
Yeah, their cash flow is crazy.
Yeah, their net income in the last 2 years has gone up pretty radically, but their free cash had a $25 billion negative swing, going from plus 10 last year to minus 15.
Those are big numbers, everybody. Those are, that's crazy.
The $25 billion swing is a huge swing.
Cash flow, right?
In actual, like, what you have in your hand.
And cash is king, especially if you got into a little bit of a slowdown.
Yep.
That's where it really matters. So we'll see. And I think this all plays into, I think, a strong case for broadening out of the markets and kind of different exposure. The Fed's I think the story for next year is going to be the Fed and earnings. So the two things that we can probably a different segment of talking about what's going to drive next year. But I think those, since we're talking about the Fed, I think that's certainly going to have a key hand. Unfortunately, at some point in time, I'd like to get them. I've been doing this for 30 years, and again, dating myself, but there's definitely long periods of time when you don't ever talk about the Fed. And the Fed's been so topical for the last.
I thought you were going somewhere else. I thought you were going to say you were going to get Kashkari on here as a guest on the pod.
And I did meet him in one of the Lipper Award event thing.
Oh, really?
Yeah, he was in the same elevator. And it was nice. Yeah, I was one of he was at PIMCO, I believe, at that point in time. So, but yeah, just me and him in the elevator, just hanging out. Anyway, so yeah, that's the Fed day to day. It's big. We've kind of talked a lot. And one last point before we jump into our next topic is generally, I saw a chart this morning. It was pretty interesting, kind of the stock reaction to S&P over the last, several meetings. It's been very muted. And I think because it's been well communicated what they're going to do to Kyle's.
Very much expected.
To Kyle's like, okay, what you mean if they do what they've kind of indicating they're going to do, the market's kind of priced it in already. The where you get some bigger reactions you saw and towards the end of last year when it was kind of, okay, are they going to cut? Now they're going to cut. Now they're in the pause mode, and it's just like, oh, okay. So
I think they're actually, the more I think about it, they might. I think you're probably right. Like my gut says, or I guess my brain says, yeah, Lisa, you're probably correct on that being a likely outcome. My gut says something else, and that is into next year. I think you're exactly right that the Fed will become hyper focused as part of the headlines, specifically because of the debt being rolled, and there's a huge tranche of paper that needs to roll, and they're at, I think, 3% rates right now on some of that long-term paper that's rolling. And if you lap that at a 4.5% rate, then that's going to be a big problem. We're already suffering from interest expense right now. I mean, it already dwarfs the aerospace defense budget for the for the U.S. economy every year in terms of what that spend is. So I think that is going to be a point of contention. And I think, you look at a divided Fed where half of them or a few of them are really vocal, and then the other half are really vocal for the opposite side. I think that infighting you don't really see that too frequently.
No, this is unusual.
It's very unusual because, to your point, is like, man, the Fed's doing its own thing. It hasn't been like a big component of our lives in terms of what we're doing. So I think next year it will be much, much, much more important.
Plus, we get a new Fed.
That's what I. That's what I mean.
That's the last meeting, actually, with how it is,
right?
Without the new Fed chair.
I think it's going
to
be
the last meeting.
No, it's not the last meeting of him, but it's the last meeting where we do not know the new Fed chair.
Right.
Yeah.
It will be announced before the next one. Yes.
Yeah.
Probably. Which also gives another layer of uncertainty among investors, right? Because the next one is expected to be a little bit more closer to Trump and what he wants policy-wise. But the interesting thing is that counteracts a little bit to that maybe independence, right? Which comes to mind then is the Fed and still independent. We heard that earlier this year where there was the potential ousting of Fed Chair Powell, which never happened then.
Well, and Lisa Cook too.
Yes, Lisa Cook and kind of replaced by Trump closer Fed committee members. But it's still like if the new Fed chair is mostly in the camp of lowering policy rates, right? Because that's what the administration wants. It still like leaves out the fact that this is a committee meeting, committee vote, and not a single vote, right? And there might be some more people in the committee now that are closer to that opinions, but still, it's the new Fed chair needs to, have a strong economic case, so to speak, right, to lower interest rates and stuff. So it's not just okay, he wants to lower interest rates because that's what the administration wants and that's what's gonna be. But it's still a committee meeting among all of them, which is not as easy and still maybe a little bit over exaggerated, that fear. I think could be wrong about that.
Yeah.
Go ahead.
Yeah, I was going to say the other component too that is related, but not, it's not a first, direct impact. It's second, third derivative would be the belly of the curve. They obviously don't.
That's what, I was going to bring up. Yeah.
Yeah. So I mean, you think about like the 10-year and all the kind of the economic implications of people feeling tight and housing being a problem and affordability and everything else. I mean, that we've talked about the belly for a while and, expectations on a 3% glide path into next year. People kind of, for right or for wrong, assume that, Fed cuts rates and you're just going to have this 1-for-1 decline in the
whole yield curve.
In the whole yield curve and or a direct decline in mortgage rates. And that isn't always the case. We saw last year, and we've talked about this exact point before, I think 3-4 months ago, when the first started coming, where they took 100 basis points out last year, and the mortgage rates, the 30-year fixed, were up 100 basis points. So now we've seen the curve kind of 398 to 420, somewhere in that ballpark for the 10-year. And even though we've seen cuts, it hasn't really, brought the belly, that 7 to 10-year portion of the curve, down at all. So, inflation expectations, we'll see what happens. But I think that is keenly on their mind. And so we'll see what happens.
Yeah, you keep on pressing if the Fed keeps cutting, and then the 10 years kind of the benchmark rate doesn't follow. It's kind of, that's not exactly what the Fed wants to have happen, right? Because a lot of stuff is benchmarked off the 10-year Treasury yield, loans, and then if you go out for a mortgage, that's more 15 and 30-year.
Yeah.
But those certainly haven't dropped. And I saw this morning, look at some interest rate stats because of the Fed, that the 10-year Treasury yield's back at 4.20 this morning. That's
is it?
Yeah. So it's at the high end of that range you just mentioned. And I think we've talked all year about, that 3.75 to 4.5, 4.75, and kind of smack dab in the middle of it. And the Fed lowering their short-term rates has not really brought the 10-year down to
mortgage rates have come down a bit, though. I think
a little bit.
I looked at the 30-year just out of curiosity, and it was like 6.88 or something like that.
Oh yeah, and it got down to 6.3, I think.
Did it really?
Too long ago? Okay. Yeah, so that's what people.
I mean, that's pretty material.
100%. And then what? For the last several years, most of the gurus are saying once you crack that 6%, that kind of opens up some mobility.
Again, that's what we see in the housing market, right? Like, there's actually more sellers now than buyers, because they're just like, okay,
Lisa, time for you to
I think it's time for me now.
And used homes are more expensive than new homes now for the first time ever.
Which is also crazy to think about.
It's crazy to think about that.
Yeah.
Unless your quality of your new home's not very good, or
part of it is the
yeah.
kickbacks too, in terms of how they run the financing. Because
you get better rates.
You get better rates because they actually buy down the points for you. They're willing to eat their margin for that. So
again, it all comes on your
and that can be meaningful. Number. Like when you buy a new house, like the mortgage rate on that is meaningful. Yeah.
Well, that's good. Well, wow, we covered the Fed for a long time. I thought we'd end up having. That's a good conversation. I love that, especially with just kind of predicting or our thoughts on where we think the market's reaction would be to what the Fed is, which I think should be helpful to the listeners. All right, let's jump into the fun segment or not fun segment. Let's talk about a little bit of winter and kind of. Lisa, you're from Austria. You have winter there, right?
We have winter, yes. We have snow.
Is it as long as Minnesota's winter?
No, it's not. It's very much shorter, I would say. And every year, and where it gets really iffy is like March, end of February, March, April. We're usually in Austria, we have very much shorter winters, and
in April you have a ton of snow still?
No. Here,
but
not over there. The March is basically over, and sometimes if you have a good March, you'd be already short sleeved. But since I live here, and I'm
clearly not a Minnesotan.
No,
she's becoming one.
Yeah. She'll be in shorts in March. You just wait this year.
I'm in my 4th Minnesotan winter.
Oh, nice.
And it's fine and all good and nice until it again hits February, March, and you see like, the rest of the US already short sleeved, living their best lives. And you're still in it for 3 more blizzards, right? So it's still miserable. So yes, during these times, and I love living in Minnesota, but during, for example, yesterday with the drive home, and on my way to the car, I asked myself like a chant, why do I live here? Why do I do this to myself? Why am I here?
You didn't say that the last 2 years. The last 2 years.
Last 2 years was fine, but this year, I think it's going to be a little bit tougher one. But as much as I live here, this is a test.
It certainly is. That's well said. Kyle, your thoughts on winter? You like it?
Yeah, so
you're born and raised
here.
Most of your life you lived here.
Yep, and then so I, as a kid, it's hard to not like it because you're a kid. So yeah, I like doing outdoor activities in the winter because otherwise you're just sitting, like a potato inside. So when we moved to Colorado, that was an eye opener because here in Minnesota, as you probably can compare and contrast to Austria, it's like we have 300 days of gray sky here and clouds, and it's not nice. And that really makes a big difference if you've lived somewhere else that has more sun. So in Colorado, it's 300 days of sun versus cloud.
I don't know, people live in Seattle, by the way. But
right. Yeah. But if you don't know anything different,
I'm just saying for the weather, like, what your point was there.
Yeah, from the clouds, right. If you don't know any different, it's like, it's the same old. But moving back here, I was kind of like, oh, this is bad. So that being said, having kids getting outside is really important for us. So we selfishly do outdoor activities. So we do cross-country skiing, Nordic skiing.
Look at you.
To get the kids out. So the kids have been doing that for a couple of years, and we started them when they were 3 years old. So it's kind of like, okay, they like it. It's good. And now they can do it on their own. Now
the actual snow this year so far.
We're going to have some snow this year, so I'm excited about that. Downhill skiing we've got going on now this year for the first time. Hockey is a great one. Yeah. So getting out and doing that. Sledding, and snow fort building. Now that the kids are old enough, I'm like, this is great. They have the stamina to be able to go out and make a huge mess. Just the full thing. So I'm very much looking forward to that this year because if you don't get outside, it's just
But that's what I always kind of appreciated with Minnesotans since living here is like you do not care how low the temperature is. You go outside and you really do something, and you have there's so much fun events in winter in the Twin City area. And I don't know that from Austria because if you do not really ski or do winter sports, it's basically pretty useless in winter, right?
Yeah.
But here it's like so much colder, the winter is so much longer, and you just don't care. You just go outside and roll with it and still do fun events outside even and kind of that is really, I appreciate that.
Although to your point, I feel like come February, it's
even you, Kyle, or you?
Well, I actually like every year. I'm like I like Valentine's Day more and more because at that point in the season, right now it's so dark. Like you go to work, it's dark. You come home, it's dark. Valentine's Day, you actually realize like come 5 o'clock, you're like, oh, there's a little light left. It's like it's the turn where it's like it's you're like it's almost over. Like wait, it's February, it's almost over.
But still 3 blizzards ahead of us.
Still 3 blizzards
usually.
Yeah.
No, I'm born and raised here, so I'm in the same camp as Kyle. But at one point in time, now I'm getting to to where Lisa's like, why am I?
You're gonna snowbird?
I definitely will. So it's.
Which one is it? It's going to be Florida or is it going to be Arizona? Those are your snowbird states.
Is that
Florida,
Texas also?
Arizona, Texas, Alabama. I was looking. I have a friend that lives down in the Gulf Coast
Mhm.
that she's raving about. That
Oh,
I
really?
got to go check out.
I
Just,
heard good things about Alabama, like
Just
Fairhope and
that's
stuff.
yeah,
It
that's
must be
that's where
nice.
she
Yeah.
lives
Mm.
actually. So we're definitely going there. But I again enjoy the outdoors. Skiing is great downhill. My kids are getting a little older, so we used to do ski trips all the time. It's
Mhm.
great fun activity. But then you go there's years in Minnesota where it's cold but no snow.
Yeah.
So, so that's not good for
Yeah.
skiing activities. But I generally like it until probably February. I think if you had to pick a terrible month in the year, I'd say it's February, just because of it's rotten. Winter's cold. You're getting sick of winter.
Yeah.
You got
You see the rest of the U.S. already, you know,
you got
thriving.
you got Kyle calling out Valentine's
enjoying.
Day is like a good thing. I'm like, for me, it's
That's because your kids are gone.
The kids are that, and it's just it's just
The kids make it a big difference, because I was the same way for a while, but now I'm like, the kids like it. And,
that's true.
It's
It's my wife's birthday. I like giving
Oh
gifts.
wait, her birthday is on Valentine's Day.
Right around there. So I
Oh,
get double
that's tough,
whammy.
yeah.
So I get double whammy. So and she's hard to buy for.
Yeah.
It's just I enjoyed buying, but it's just as you've been married for 25
Yeah.
years.
I know, yeah.
It's a little-
It's getting
little more.
tough.
So
for
it's
you.
the cold
Yeah.
weather. It's that. It's like I can't wait to
Everything
get
is
to.
miserable.
Where's that sunshine? The days get
Mhm.
longer. So I do like that. So anyway, Minnesota weather.
Well, do you go on any trips now that the kids are gone? You don't take any like spring breaks for yourself?
This will be the first year, and my son's playing tennis down in Florida. We may go down there in March
There you
just to
go.
kind of watch
Spring
that. But it'll be
break.
weird without we always since we've been married taking trips with our kids everywhere. And so
Yeah.
our trips, unfortunately, I rather do it in end of February, beginning of March.
Right.
There's a line more to like January.
For school or for?
Well, yeah, because of college breaks.
Oh, yeah,
and
yeah,
It's been
yeah,
a while,
yeah,
right?
yeah.
You got to remember, my kids are a little older, so I'm taking vacations in January. I'm like, well, January, I'm still okay with winter.
Yeah, right.
Yeah.
You have
So-
to do it.
Yeah,
when
you're not burnt out.
sick
Not
of
burnt
it.
out.
Yeah.
So ideally, it would be the end of February.
Yeah.
March would help. My
Well,
Do
mental
you
state.
spring break?
Not.
She's
over
always
last-
on break. Lisa's never on break. She's always working.
It's some maybe a weekend or whatever,
Mhm.
but not necessarily a full weekend.
Yeah, you're not like
February,
flying down to
March.
like Cocoa Beach or whatever in Florida.
No. But we might do something in January for a weekend, just 2 days or whatever.
Well, there you go. This should be an interesting episode for everybody to listen to. You heard a little bit of the Fed. You heard about a
Well-
little bit of Minnesota love / hate for on winter. Not hate, but just kind of.
I think we did a great job in keeping everyone that ever thought about maybe I should move to Minnesota. I think we were the tongue on the scale for that person.
No,
to
they
say,
don't even know.
No,
They're probably in the same spot because
Yeah.
we're like, it's great. No, I hate it. They're like, nothing
It's
changed.
mostly good. It just gets long. I think
Yeah.
that if the winters were
Yeah.
instead of 5-6 months, it'd be that normal 3 months. It'd be a lot
Yeah.
better.
Yeah.
Yeah.
All right, everyone. If you like this, like and subscribe. See you next week.